Good morning, Jeff. How are you doing today?
I'm great. How are you, Roger?
Doing really, really well. It was really great seeing you and your family here in Ponte Vedra a few days back. I had very, very, really. It was a lot of fun. It was a lot
It
of
was
fun.
nice.
I'll leave
Always
it
nice to
there.
get the families.
Yeah, we
Always
got to
nice, right?
we got to do it more often.
Absolutely.
Crazy markets we're in right now. We got Netflix, we've got Tesla on the table. We had bank stocks reporting. We're like all over the place, and I mean we're like all over the place. What do you make of what's happening right now? What's your take?
So, let's start with the 30,000-foot overview. I'm bullish for the summer, at least until the summer starts to fade into the Indian summer. But next few weeks through mid-August, I think the market's got some legs to run. A lot of these beat down stocks have much more upside. But then every now and then, but it's going to be choppy. Every now and then you'll get like a curveball, like the cruise lines, for instance, right? So we had Carnival, we had Norwegian, and I'm bullish on Norwegian. It's actually one of my stocks in the monthly money flows, but it's much higher than when we got in. It should be down to open because of this Carnival news. But Carnival announced, I don't know if you saw this, Roger. They announced, I do know that you saw this actually. We talked about it offline, that they are issuing new stock. They're issuing more stock to raise capital. They need to raise $1 billion. And it's typically a decent place to buy the stock, except for the fact that they're raising capital, diluting shareholders to run their operations, to cover like their expenses. So it's the same kind of thing we saw with UAL yesterday. United Airlines reported last night that stock's getting smashed pre-market. Also, um, jet fuel costs are killing
Right,
travel
right,
companies. People
huge.
want to travel. They are traveling. There's a bottleneck of traveling out there in the world. I've done a lot of traveling this summer. You have too. People are getting out of that funk that we've been in for a few years. It's thawing out. Nature is healing, as people like to say. But the built-in costs of running a travel business vis-a-vis fuel is a problem. The margins are getting crushed.
And the problem is we don't really we and here's something I've been saying. Those companies have not been getting any help from the U.S. They're incorporated out of the U.S. There's no aid coming their way. We may have another bout of COVID coming. I mean, what's the upside for these companies? I just don't see any potential upside in the near term. And you and I have been talking about this now for what, 3 years? You know, can you hear me? Okay, Jeff.
So, sorry, I'm sorry. I did it. You cut out. Say that again. I'm sorry.
I said that we've been talking about Carnival for the last several years, not getting any love from the markets. Do you still see that being the case? Do you see any upside for these companies, for these foreign companies?
Well, I actually am kind of contrarian in this regard. I see like these secondaries, like when a company, so companies are the worst stewards of capital in the world. They go full blast buybacks at all-time highs just to pad the bonuses of CEOs. And then they sell their stock in the basement at the worst time after stock's been smashed 40%, 50% because they have to raise capital. And so I like to bet against them at all-time highs, and I like to buy their stock because they're just bad at it. They're so bad at it. And so I actually think that like an intermediate bottom on this secondary offering would probably be put in place in Carnival. I used to run a secondary book for a hedge fund
Yeah.
where I had like all the big banks of the world calling me and saying, Jeff, do you want to put in IOI, which is an indication of interest, in for our Carnival secondary? And if I got a call on this stock to buy the secondary, I would have said, as much as I can get. Give me as much as you can give me.
Interesting.
I would
Well,
put a, I
I,
would
I
have put
will.
a big bid in, big
I,
bid in it.
I'll tell you this. The price of these stocks right now is. I mean, if you look at the charts, you're
Yeah.
talking real. You're talking. I mean, highs of 31. We're at 9. I mean, you're getting a deal right here. and
That's what I'm saying.
yeah.
That's what I'm saying. Because also, like, guess who else is buying the stock? It's the book runner buying the stock all day. So, like, Goldman is also buying as much as they want at this level, and they're going to defend it, and they're going to do everything in their power over the coming days for people that bought this, participated in the secondary with them to be okay. Now, of course, no trade is bulletproof, but it's high probability. It's a high probability trade because think about it: if someone needs money, are you going to get a bad situation for yourself for lending money? And that's
Right.
what this is. They can't borrow money because corporate debt, I know you watch bonds a lot.
Yes.
Corporate debt is too expensive. So companies are going to be, they're going to be issuing stock to raise capital in this recession. I think it's going to be a massive thing. So you have to know how to play this. They're going to be issuing stock uh, in lieu of not wanting to pay 7%, 8%, issuing bonds that they can't afford. So I think it's going to be a situation where you can make some short-term, nice rips.
Let me ask you this, and
Yeah,
I know this is going to be a question that a lot of the guys are going to be asking, when they watch this video.
yeah.
What do you think about airline stocks? Would you put them in the same category? Are you seeing any of this on the horizon?
Well, yeah, airlines are always needing money. They've been getting money for free. That they're a utility when they need money from the government, and so I believe that a little bit different with airlines because airline bookings are actually more solid than cruise bookings. People are traveling via air at almost a pre-COVID level, maybe even more. I think we set some records this summer in terms of visitors to different airports, which is why you have all this stress on like Heathrow and the major international airports. But the cruise industry is lagging because who wants to get stuck on a floating petri dish, as you mentioned, should another big wave of a new variant, the monkey variant, who knows? It could be any, God knows. God only knows what's possible. All of us that pretend we know, we don't know. Anything in
No,
the future can happen.
no.
But I just don't want to be in a situation where I'm out there in the middle of the Caribbean with a bunch of you know super large Americans that are crushing the buffet, and they're like, "You guys can't go home. You got to be on this boat for another month." That's my night. That
It's a
keeps me. I
nightmare.
wake up in sweats of that. So I think a lot of people are a little skeptical of going back on the cruises as much. So if I had to put on a money link, you just gave me an idea for a money link. I'd be long the
Perfect.
airlines versus short the cruises, but I still think there's good cruises. Like I like Norwegian that's going to finish just. I think these stocks are going to be still higher. There's still going to be a bid in travel this month.
Gotcha. Gotcha. Very interesting. Let me ask you this:
Mm.
backing away a little bit. Let's talk a little bit, a little more globally.
Yeah,
I want to get your, I want to get your take. Fed's coming out, I believe, on the 28th.
yeah.
Do you think right now, we're obviously we're looking at the long bond. Do you think the 0.75 is priced in, or do you think there's any the market? Let me just base. This is why I'm asking you this. I was looking at the
Okay.
yield curve. I was looking at the yield curve the
Yeah.
other day, and last
Terrible.
week
Yeah.
it's terrible. But middle of last week, priced into the into the 10-year bond was roughly a 27% chance of a full basis point hike. Now that number back down to about 10%, and the market has softened. I mean, has rallied
Yeah,
and
that's what started the rally. One of the Fed members was out, and there's a guy at the Wall Street Journal that gets like information from this one dude. It's like the Fed's unofficial way of leaking what they want out
yeah,
there
yeah,
by the Wall Street Journal. This I can't remember his name, but you know who I'm talking about. And there was a comment in the journal last week that started this whole rally, this whole mega run, where they were like, "We're pretty committed to 75." So I don't think the Fed is in the business of going totally nutso. I think that this morning you saw a weak employment figure come out.
yeah.
Not yeah. So jobless claims they were looking for 240, I think, and or they were looking 240, and they got 250. They got 251. So a few more people jobless than the market had expected, which was bullish for stocks because that's their case. That's their case for not raising too much, that they're
Right,
starting to see softening in the economy. So
right.
I think 75 is a nice number. It's a digested number. I'm a
Agreed.
little nervous about the inversion of the yield curve with the 2 year being
2-year,
320.
10-year.
I
Yeah.
don't know what it is now. Yeah, the 2 year now is like 325 or something like that. It's
Three
high. It's
It was
high.
three
And
24.
so,
Yeah, right. You were right on the dot. 325 this morning. Yes.
yeah, so that makes me a little nervous watching those rates. And that's why you're seeing these guys are like, and so the short-term paper. So a lot of these companies that are levered, they're over levered, as you know this, they're borrowing just to facilitate their operations. They're borrowing short-term paper. So
Yeah.
that's where the squeeze really comes in on these companies because they're borrowing 60-day, 90-day paper.
Yeah.
They know they have these invoices, they know they have sales, but they're still in the commercial paper market borrowing money, and it's getting more and more expensive to do so.
Agreed. Another report, since we're talking about Fed data, this report came out and it was god awful. Now, the reason I want to bring this up, the manufacturing index, is
Mm-hmm.
because last
Mm-hmm.
week's number, Jeff, last week's number was the first negative number we had. Last week's number was the first
Yeah,
negative number we had since 2008. Okay, and
that's
it
bad.
it was the
Philly
first.
Fed's huge. It's an old school number too.
Yeah, yes, it is an old school number. That's why I'm bringing it up. It's widely used by
Yeah,
the federal, it's the Philadelphia.
and no one talked about it. They just kind of
No,
like brushed it under
no,
the rug.
no. But this is important. This is something we need to discuss because this does shape things. Now, so the number was 3.3. Look at the number that came out this morning. I mean, look what
They
they were.
revised. Yeah,
This is. I
look
mean,
at that range, Roger. Look at the
yeah.
range. It
Which
was
means they
like
have no
the
idea where
lowest
it's.
was negative. It was worse than the lowest, which was 0.8 or
Right.
8%.
Right.
And then 5.3 was the high. Look at the range of economists.
Yeah. Which
Look how
means
wide they
and,
are. They don't know
and
what the hell they're looking
they
at.
have no
Nobody
idea.
does.
Folks, when you see a range, they it means they have no idea where it's going. It really does mean that. We're not joking
Have you
around.
ever been in a market with less visibility in terms of what the economy is actually
Jeff,
doing?
I'm so glad. Okay, I am so glad you just said that. I was having breakfast lunch with my assistant Matt yesterday, and I was telling him this, and he's probably tired of me. I have no, I have not, because usually it's like this. Typically, this is what we're dealing with. Are we in a choppy market? Are we in a bull market? Or are we having a little mini correction that's going to last 2 weeks? Now you have you've got three doors. You've got door number one. Door number one is, door number one is this. We've already experienced about half of it. The worst is behind us. The market is pricing in. The market is pricing in what's already in the economy 6 months down the road, which means most stock prices have bottomed out, even if the economy gets worse, and we're going to get better from here on out. That's door number one. Door number two is, doom gloom. We're only about halfway done. We got a lot more to go. The world's going to come apart. That's scenario number two. And scenario number three is a very interesting one. The scenario three is we're not in a recession. We're in an inflation. We're going to stay in an inflation, but the recession is too far to really give a shit about us right now. Excuse my French. No, but that's really what it is.
Me, Roger. I like it. Embrace your inner street guy.
That's how I see it. There's like three.
It's infuriating, but that's why you're seeing a choppy tape, right? Because you're getting
Yes.
a tale of two cities.
Yes.
You're getting like a bipolar data reading set from a macro perspective. On the one hand, you have the consumer, which is still pretty healthy. Like they're still bidding up houses.
They're spending.
Housing market hasn't. They're spending. Housing market hasn't cracked really.
No.
There's not really much relief yet on the rental front. Travel's still pretty strong this summer, even with the COVID and stuff. People are traveling. Have you looked at hotel prices?
I don't remind me.
And they're fully booked, dude. They're fully booked
completely.
Like it's not like they're empty. So but at the same moment in time, you have saving. You have people they're in a funk because their purchasing power is starting to get affected. You have the joblessness, which is increasing a bit. You have persistently high wages, which is bad for companies. You have some companies, big companies like Apple, who took the market for an entire screw ride on Monday afternoon, that are saying, we're not spending anything in growth for the rest of the year. We're not hiring. We're not increasing. We're not expanding. We're done. Like we got to see this through. So the problem with the economy, the problem with the stock market is what people forget is that it's all a collective feeling and psychology and emotional thing. And companies are like human beings. If they start to feel the retreat, they will go on retreat too. And that becomes a self-fulfilling prophecy, I
Yeah.
guess is what I'm trying to say.
Yeah.
So even if we weren't supposed to have a recession, maybe we have a recession because we're willing it into reality. And you know what, Roger? Maybe a recession isn't the worst thing for the health of the economy also. Like,
Right.
would you rather the housing market keep doubling and
No, no,
50%? I
no,
mean, I would, because we don't, but for the economy,
no.
we're owners. We're in the good part of it.
I,
But for the broad economy, that's a bad thing. So
yes.
it has to get under control. There has
Yeah.
to be equilibrium.
So a few words. First of all, I don't think the housing market. I think it's realistic to think that the housing market is going to cool off. But cooling off and having a 50% haircut are two different things. I'm not expecting a big haircut in the housing market because so here's my personal belief. And this is obviously I do not have a crystal ball. I believe we're in door number one, where the economy is recovering from where we're at and a little bit too far. I think we're somewhere between door number one and door number three, where a recession is still foreseeable, but not here quite yet, which, by the way, would be in line with the inverse yield curve. But we have bottomed out in terms of this current state. So I think that we still have 7 months of choppiness, this gyration, this unknown, this unforeseeability. But then we start coming back up. We could start coming back up, and the Fed and the housing market gains strength again, because I think the Fed will back off the rates. I think they're going to be a little tough for the next couple of raises. Then I think they're going to back away and kind of see where things go closer to the end of the year, closer to the midterms maybe. So I think the market's going to be in this gyration for the next 4 to 8 months, kind of a wait and see territory. I'm envisioning volatility cooling off a little bit, and kind of like you're saying, kind of like not really.
It has, yeah.
Yeah, kind of like not really know where we are. Because look, if you and I mean, look, let's be honest. Energy was leading for 6 months, and then now it's like now it went from the strongest sector to the weakest sector. Healthcare and consumer staples went down. Now they're back up. I mean, this is a very, very difficult market. So I think we're not the only ones feeling this way. I think the economy feels this way, and I think we're all going to be. And by the way, historically, after a strong vertical move in either direction, we historically tend to go through a very nice choppy period. And I'll say right now, we went through a pretty damn good historic move right here, vertical move. So
We did.
So this is not this. So this what we're seeing in the long bond. To see a little more of that from the stock market, first of all, it would be kind of welcomed, in my opinion. B, it would be great for swing traders, right? Because, I mean, it's much better than this. And C, I think it's okay. I think it's okay to have that. So that's my opinion. I think wait and see.
I think you have to stay. I think it's such a fluid situation, Roger, and it's something that I've been actively working on with my own trading and my own psychology. You have to leave your, and this is going to sound like a chicken shit answer, but it's not. It's truly the way it has to be. You need to leave some sort of flexibility in your mind of any of those scenarios playing themselves out. And I don't believe that it's going to happen this summer. There's a couple of things that are making me bullish. I'll tell you what the bullish case is. What's making me bullish? What makes me bullish is the fact that you still get inflationary, like you're still getting these mega inflationary reads, like all-time high CPI, and stock market rallies off that. That hasn't happened yet. That only first happened this month. That's the first time in July 2022 that the market reacted okay and then positive to what was an incredibly hot seat, because we have no end in sight still on inflation. Can we admit that?
Well,
that hasn't really.
Well,
yeah,
core, and we know that energy and food is down a lot, so we know
but it's not. But it's still persistently pretty high.
Oh,
it's
yeah.
50. It's not.
Oh, yeah.
It's off its highs, yes, but it still hasn't like collapsed.
No, no.
Remember lumber that did a full 360 or 180? Oil hasn't done a 180.
No,
still
no.
$100 a share. It's still $100. It's still $100 a barrel.
Agreed.
So,
agreed.
And the 10-year is still above 3%.
Yes, it is.
It hasn't given back. It's not at 350, but it's
no,
at 3%.
no,
it's not at 1.5 like it was.
No.
So the inflation, it's cooling off on the inflation, but it's still much high. Listen, they used to target 2%. Now everybody's like, yeah, it's only 5.8, 5.9. Still very high, still persistently high. Like, not a number people don't want to see because it's not good. But I guess what I'm trying to say is you have to leave yourself open to the possibility, like you said, that the recession is not going to be as severe as the market is pricing it in to be. But you also have to leave the possibility that what the Fed has done isn't enough yet to stop the inflation.
I
You
couldn't.
have to be open to that possibility because there is still some persistence.
I agree with you 100%. This is why
Let's see.
I'm very
We gotta see how it
perplexed.
shakes
I'm
out.
very true. And if we didn't, then we wouldn't be realistic. I agree. I couldn't agree with you more. I couldn't agree with you more. So that's one of the reasons why I think we're going to be kind of in a wait and see mode
But
for
I
a
think
while.
the new stuff that creates bearish momentum in individual stocks is the stuff like Carnival. It is like guiding lower. It's a single stock case by case thing. So
Right.
I think broadly speaking, the market over the next course of the next 30 days will act more bullishly. But you just have to beware there's going to be some landmines in individual stocks who are not having as rosy a scenario, and the market hasn't fully reflected how bad their earnings will be, how bad it'll be for their individual endeavors. Because a lot of companies have been built like the more even the hardest part that we haven't even discussed is all of this that we're experiencing now is coming off of the back of the most unprecedented quantitative easing cycle in world history, where the Fed created like $8 trillion out of thin air and created an environment for people to invent digital doggies that were worth $500,000 and shit
Though,
like that.
though,
So how do we unwind? So we're coming off a fluff destruction that was necessary, frankly speaking.
yes, yes,
But the resilient, important companies, the good ones, the good ideas, they will bounce back harder than ever. That's my belief, because the core economy is still going to be strong longer term. But if you're buying Dogecoin today, hoping it goes back to all-time highs, you could be disappointed. You could be
agreed.
disappointed. You
Jeff,
might be.
Jeff, thank you very, very, very much. I appreciate the session. I think this is a very, very,
Yeah.
no, I love when you and I can just sit down and just talk like two guys, nobody here, just you and I, it's really great. I love it. I love it.
Well, it's a real conversation, and there's no like, we don't have to interpret it.
No,
We don't have to like run it through a filter. It doesn't
no,
have to go through the Rosetta Stone. It's just like, you have a question, I answer it. I ask you a question, you answer it, and we move it along. And somewhere in the middle, like, I change my opinion a lot by some things you say, or at least
same here. It works both ways.
It's important to be rigorous in your own analysis, and like to have the ability to defend it and have the ability to question it and change your mind. The biggest skill a trader has to develop is the ability to change your mind.
Agreed. Jeff, thank you once again. I'm going to let you go before the opening bell. I will talk to you next week. Thank you for being flexible with your time. And again, I'll talk to you soon. Bye, guys.
Have a wonderful week.
Bye, everyone.
Thank
Bye,
you,
guys.